Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everybody. It is June 21st. We got a couple economic news to go over, so we'll jump right into it. We'll start off with the market flash manufacturing PMI for the month of June. As you can see, these have been pretty bad numbers, actually, because we're right on the verge of contraction here. So anything on these next to indexes above 50 is basically expansion. When to get below 50, it's basically contraction. These are numbers that we haven't seen in a little while. So as you can see here, we had in May, it was at 50.5. We inched that much closer to that tipping point at 50.1 in June. Now when you get to services, market flash non-manufacturing PMI or services, it was 50.9 in May, and it slowed down to 50.7 in June. So again, both sectors, according to market PMI, flash PMI, it's showing some slowdown there. So it's something that the Fed is watching as garnered their attention. Let's move on here. We got the existing home sales for the month of May. So in April, this was actually revised higher. It went to up to 5.19. So the forecast will come for 5.28 and exceeded that to 5.34. So we had a pretty good increase. It was about 2.5% increase between month over month. But if you didn't include the revision for April and it stayed the same, it would be closer to 3% increase. So nice overall numbers. We're seeing this improve here a bit on existing home sales, which is obviously a good sign for the market. So let's kind of move along here to the headline news. Stock market is mixed. S&P, after breaking its record yesterday on the close, since the stock market took off quite a bit, it's taken a little bit of a breather today. It's the only one that's in negative territory. We had a few members after the meeting speak. Bullard talked about he was the lone dissenter about wanting the rate cut this past meeting. We had another one from Neil Kashkari, I think his name is. He's a Fed member out of Minneapolis, but he's not a voting member this year. But he thinks the Fed should cut at half a point or half a percent. This should cut about half point instead of quarter point. So we got some Fed speakers out there speaking, and we'll have to kind of wait and see. So, but we still have the aftermath. We still have that euphoria talking about how they believe that July will be a rate cut coming in there. It will be interesting to see if they do a half point. Some people are calling for a half point, so we'll have to see if that comes to fruition. Personally, I think it'll be closer to a quarter point. I think they will cut, but probably be a closer point. And they want to kind of wait and see how things are, unless things get that much worse for the next meeting. The next meeting is at the very end of July, like July 30th through 31st, I believe. So we got some time to see data between right now and then for them to make any decision. China, again, that's the same thing, same repeated news. It's some optimism being grown that the U.S. and China will get back to the tables with the context that both presidents will be meeting on a side table at the G20 meetings next week. So we're hoping to clear some differences there and hopefully get back to the table. And then Iran, of course, they've been kind of making the news. There's some oil tankers that have been attacked, or bombs, I think it was, in the Strait of Hormuz, and being that, which is kind of a little troll code for a lot of the oil to come through, and Iran is being blamed for that. They deny it, but they've been blamed for it. And then also the attack on a drone that was flying over. We had a high altitude drone flying over, and of course they sent a landed missile, air missile. Well, they sent out a missile to and destroyed it. So President Trump had commented that he held off on a retaliatory strike on them, a last-minute retaliatory strike against Iran on this. So this could escalate into something much further. Unfortunately, tensions are rising between the two countries, and of course, oil prices will most likely rise as a result in that area. So let's kind of see how the bond market is moving. Excuse me. The bond market's down. So we're down about 13 basis points currently. We broke below that ceiling that we were up yesterday. But I do think it's going to be temporary. I do think it will bounce back up. I think it kind of weakened after that first strike up there. So I think we'll see a rebound in this here a bit. But right now, prices did worsen. We did have a price for the worst yesterday because pricing did deteriorate yesterday. after being much higher. And then it deteriorated. So we had a price for the worst yesterday, as well as we'll have another price for the worst today. So we have basically double right there. As you can see, the yields broke above its what was the floor of support became the ceiling, and it broke above that. Again, we're approaching the next line here, which I think will hold and will push it back down. Again, I think it's temporary as well. I think right now the yields are kind of adding pressure to it, but I think they will be pushed down further. This is more of a temporary blip, so don't be too worried about it. All right, so that's pretty much a wrap. If you guys are looking to refinance or purchase, feel free to DM me. I'm a loan officer. I can assist you with the pre-approvals, financing, and also help you out with some different strategies with your mortgage plans. We do have a number of loan programs that are very useful. Some exclusive loan programs here as well at CMG Financial. So feel free to DM me and how we can help you out. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.